anybody could watch this and take something from it. What we have, resistance is going to be on the top. Support is going to be on the bottom. This is a monthly chart here of Euro USD. And what we're going to look for are ceilings and floors, okay? Ceilings and floors where price runs into. So resistance would be when the candles come in and hit it right here. You see the hit and the wick, hit and the wick, 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 wick. That's a resistance, okay? Support would be down here where the price comes in and bounces, bounces, bounces. So it doesn't want to break the floor. That's support. So, um, just real vague and in general, this would be a support and this would be a resistance. All right, this is the monthly chart. So each one of these candles is a month. This is a huge time frame, okay? This is from 1994 all the way until now. So we're just going to have our extreme high and our extreme low marked on the monthly. Let's go down to the weekly. We'll zoom out and then we'll draw a few more. So let's have, okay, this would be a support. So we have this one. Where would the next one be? So the way I find it is just bring the cursor up and until you get a solid amount of hits on this one cursor. So, we could say here. So let's go from here to here. All right, so you have this here. Let me zoom in. So you have this level hitting this as support. All right. Let's move on to the next one. Let's go on up and we have one hit here, one hit here. Let's go a little further. All right, so that would be a good level. We have one hit, 2, 3, 4, 5, 6, 7. So seven hits if we draw a support through here. All right, let's look at resistance. So let's look. We have one hit there. We have 3 hits there. Let's go a little further. Well, let's drop one here. All right, we'll drop the first one here where we have 3 hits. Let's find another. We have one hit here, almost a hit there. A nice spike through, and a hit. So let's mark it here. Let's go a little further. And we'll put one more here. All right, right through here. All right, so that's your support and resistance. So again, weekly chart, these are giant areas. So what we can do is we can tighten them up a little more, make them a little more clean and clear and concise. But this is basic, basic, basic. Okay, you're not actually going to use these when you analyze a chart this way. This is just to get the point across. Okay, support on the bottom, resistance on the top. Let's go into the daily chart. All right, so daily, daily, daily. All these are a day. So what I want to look at next, because as you can tell, this is pretty sloppy, okay? If you look at this, you're like, man, I don't know what's going on. And I don't either, honestly. It's too big, too broad. I just wanted to get the point of support and resistance. But now what I want to look at are more ways to make this more precise, more accurate. So what we're going to do, we're going to erase all that. We're going to go back to the weekly. So now that you know support is on the bottom and resistance is on the top, okay? Support, resistance. We're going to look for levels where price makes both of these things occur. All right, so for example, let me draw. Let's do this, a horizontal ray or a horizontal line. I'm gonna mark it and then I'm gonna tell you why I marked it, okay? All right, so just generally, okay, back on the weekly chart, so this is a massive level. All right, so that is gonna be our support resistance line. Okay, this is gonna be the accurate level where price comes into. So in order for us to draw this, we need to see it form supports such as that, price bouncing off of it. We also need to see it forming a resistance. Okay, here and here. Bounces off of it, bounces off of it. So this is what we call a key level or an area of friction. We have price coming in, bouncing here. We have price coming up, bouncing there. That is support and resistance. This line is the area in between the support and resistance, okay? It's where they both come in together. And that's going to be your strongest areas where the market's going to react. So now let's go into the daily chart and let's try and find some of those areas. So we have that one there on the daily. And then let's just look here. So you're going to want to zoom out. Okay, the more you can see, the better, because you're going to want to take it back as far as you can. You're going to want to let the price go back as far as it can. So look right here, we have support, 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 support. So we'll draw one here. Let's get as many touches as we can. So that's a nice support here. Let's see if it makes a resistance back in time, and it does. You can see here it makes a resistance and then it breaks through. Let's go back a little further so we can see it forming a support. Now it's not always going to be exactly to the T. You're going to have these breaks and it's going to come back through. But what you're going to want to look for is the velocity and the speed of this action. So you do have the stiff break, and then you have the candle, one candle goes all the way back through. So you know that's a strong area. It takes strong movements to break that area. Let's go a little further. We have it here reacting. And if we go a little further back, okay. So that would be a level there on the daily time frame. Let's look for another. So let's see. Dun dun dun. We have one here. 1, 2, 3. You don't need any certain number, you know, the more the better. So 1, 2, 3, that would be better than just having that one, okay, on that one wick. So let's go in here and let's get here. Let's put the line here where you have one touch, two touch, three touch. And let's zoom out. And as you can see, it respects the line there, also respects here. Price is bouncing off. And then here as well, bounces off, goes through, comes back, makes a resistance. All right, so this is a key level there. Resistance, breaks it. So this would happen all the way back, okay? Right there, smash through, reacts here as a resistance. All right, let's do one more. So we'll take it up a little higher. We'll see, let's see here. So we have a big spike and a big spike. Let's see why that happened. So I'm not going to put it up there on that wick. I'm going to come down to where I can incorporate the most touches. All right, so we have that touch, this one, this one, this one, this one goes through, comes back, 1, 2, 3, 4, 5. So a lot of touches right there on the daily. Let's go back and see how price reacts. Okay, you can see right here, there's a lot of friction on that line. Here's a big spike into it, as well as here, spike in, spike through, retouches, and then continues. Here as well, we have it as a resistance, resistance, resistance. All right, so as you can see, that's the basic foundation of how to find a key level. You can go deeper, so let's go to the 4-hour. And what you can do, you can just leave these on if you like. You know, it's going to make your chart a little messy, but at first it's good to leave these on so that way you can see how price reacts when it comes into your levels. You could even label them as well, so you can have that there. And then just write daily. That's it. And it's going to put daily there. So when you see that line, you're going to know that's a daily resistance, or that's a daily key level, or that's a daily support. And that's it. So let's go to the 4-hour. Actually, let's go to the 1-hour. 4-hour is going to be too similar. So let's just look at the recent price action here on the daily, or on the hourly, sorry. So if we're going to find them here, let's use a different color. Let's use blue. And let's take this down. So let's try and find some levels here. Let's see, we have a bounce and a bounce. Let's try. Let's put it right there. All right, we have the bounce, we have this bounce, we have a breakthrough barely, we have a bounce, 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 bounce. All right, we have lots of contact through here. So this could be a level. And then we look back and we have it bouncing here. We have it bouncing here, bouncing through, coming back and touching, and then it continues. So we can even take it further back. And if you look here, we have it testing as resistance, 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 resistance. All right, let's go a little further. And we have here resistance, testing that line, coming through it, support, resistance. So that's, you know, you can see how price responds, okay? Once you find a level, so if you find a level here that it responds to, that it reacts to, it's going to do the same all throughout history, okay? So then you know that's a spot where price is going to react, and that's where you're going to want to take some profits or expect a movement, okay? Let's go on down a little further. Let's go to the 15-minute chart. All right, so we have our daily up there, which holds a lot more significance Then the hourly, let's go ahead and label. So we have hourly, we have daily. Daily would be much more superior. So when price gets here, you could expect a larger reaction than here. You're going to get bigger movements from the daily, from the weekly, from the monthly, because they're larger time frames and they have a lot more leverage over these lower time frame supports or resistances. So let's look at the 15-minute if we can get a level here. Let's see, we have price coming up, 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 bouncing, bouncing, bouncing. Let's draw it here. So, or even there, we can do both. So we have a nice resistance here on the 15-minute. Let's change this to orange. And then we have a nice level here. And let's label. So these 15-minute levels are going to be used for the day, for the week, for the short-term trading. Whereas this daily level is going to be used for larger swing trades. So when you have the price come up into this area, you can expect a longer duration movement. Okay, so what I mean by that, comes up there, I'm going to short it because that's a level of resistance, right? So if it reacts as resistance, we will short it. If it blasts straight through it, if price just doesn't respect it and keeps going, we're not going to do a short. We're not going to short it. We're going to short it when it responds to that level and shows us the direction it wants to go. So, for instance, it's going to be a longer movement because look, I mean, we could find different levels in here to take the target to, but I mean, we're talking several days. I mean, let's, for example, June 23rd, 2020, until it hits this target down here of June 25th, 2020. All right, so you have 3 days, at least 3 days to hold that trade. All right, and again, that's a massive movement, but that's a 3-day trade. Whereas if we come into this area on the 15-minute where we have the resistance, we have the support, say we want to trade that. All right, we see, yeah, that's a good level. Price has bounced, came back here, bounced, came back here. Let's get in here. I mean, that's a fantastic entry, but let's just say you get in there. You would put your stop loss above and then take it to the next level. All right, now this would be a super short-term trade. A couple hours. What you have is a lower return, lower risk reward. This is a 1 to 2. The other one was like a 1 to 13. But you don't have to hold it for 3 days. You have June 25th until June 25th, 23rd. So you have essentially a little less than 3 hours worth of movement here. So this is like a 3-hour trade, not even. So 22:30. Yeah, I mean, it's a 2 hour and 15-minute trade, okay? Because it hit your target down here and you get your money. All right. Now you say, well, it's only a 1 to 2 risk reward. But look, you could make it a 1 to 4 to be safe. To be safe. we can have the stop up there. But if you want to get more specific and more tight with a greater risk, with a greater risk reward, you got to go down lower into the lower time frames. All right, and then we can see that spike. And then we put our stop above that. We wait for that retracement, enter on this one, okay, the lower high. Once it's made the move, we enter there. All right, what can we see? We can see a fib level. I can see it right now, but I'm going to draw it just so you see it. We have our fib level here, high to low, back up to that 78.6. In my previous videos, I said we look for a sharp movement from the 78.6, just like that. It taps into it with that wick, get your entry. I mean, say you could set a stop, you could set a pending order right there. All right, now this is a 2-minute chart. This is advanced type stuff, but I'm going to show you because I'm here. We have that resistance, we have that support. We have that sharp move down where we've seen the momentum shift. We've seen the direction the market wants to go. We drop our fib here. Once the price goes back past this green area, 23.6, we know the fib is valid. So we're waiting for price to come into the golden zone here or tap the 78.6. I like the 78.6. You're going to get sharper movements, less risk. We have the tap into the 78.6, and what do you see? Rejection right away, all the way down. All right. So say we enter here. Say we get that great entry, get a little lucky and get that fantastic entry. Stops here above. We're out of this trade. I mean, I'm out of it. I'm probably out of it like here, honestly. So 2054 until 22. So like literally an hour trade. Some people might hold it until the target, but the risk you run is that right there. If you just go away and say, oh, it's going to hit my target, you might miss it by like a pip, okay? And then you're going to be really, really mad. So anyway, say you take it to, the first time it hits it, 2238 to 2054. So like an hour and a half, literally an hour and a half trade. You got a 1 to 6.9 risk reward ratio. And that's it. All right, now that's pretty in depth. I really didn't want to get into that with this video, but I'm sorry. Back out to the hourly chart, support and resistance, 15-minute. All right, where were we? 15-minute, okay? So I'm gonna wrap it up there, guys, okay? I'm gonna keep it short and sweet with this video, but just remember, resistance is on top, support's on the bottom. You're looking for areas where price hits as resistance, hits as support. That's gonna be your support and resistance line. That's going to be where you're going to get the reactions, okay? All right, guys, take care.